Hello, welcome to THP tutorials. In this video, we'll be looking at management accounting for business. We'll be looking at activity-based costing and just in time, right? Very well. So before we begin, make sure to hit the subscribe button and drop a like. And when you're done with this video, kindly leave a comment and let me know how you found this video. So activity-based costing. Now, activity-based costing, or ABC, is a more recent development in cost analysis, right? Now, it is based on the idea that to use a single absorption base of either machine hours or labor hours does not accurately reflect the cost of the overhead cost being incurred, right? So, absorption costing and activity-based costing, they are all trying to do the same thing, right? They are all trying to determine or ascertain the cost involved in producing a single unit of a product, right? So activity-based costing, or ABC, came about because what existed before that was absorption costing, right? And with absorption costing, how it worked was that you use a single apportioning base of either labor or machine hours to determine the cost of the overhead cost that the firm was incurring, right? So it turns out that was more inefficient, and the supporters of ABC argue that overhead costs are only loosely related to to time and are not often related to the volume of production, right? So you're saying that there is a higher correlation between overhead costs and then time rather than there is to volume, right? And volume is what matters, because the more you're producing, the more cost that you're incurring. And absorption costing was not putting in or did not account for the volume aspect of everything, right? It was measuring everything or absorbing the cost based on time. That was what machine hours and then labor hours, right? Now, these supporters of ABC also argue that overheads in a modern manufacturing environment are related to the complexity of the production. The more complex the production process for a product, the higher are the overheads incurred on its behalf, right? So, for example, a product might require a number of complicated machine setups or quality control activity. Or quality control activity might be more intense for some products than for others. An activity-based costing approach attempts to ensure that overheads are traced to products in a way which more adequately reflects the overhead cost which has been incurred on their behalf. Using ABC approach, overhead costs are accumulated initially in activity cost codes, right? This might include, for example, order placing for material handling. Costs would then be collected and analyzed for each activity cost pool, and a cost driver would be identified for each activity, right? So what this is basically saying is that with activity-based costing, we don't measure or we don't try to ascertain the overhead cost per product using the labor hours, right? But we do so because they realize that the higher the complexity of production, the more overhead costs were incurred, right? So due to that, activity-based costing measures stuff or measures the cost or tries to ascertain the cost, based on the complexity of the production, right? That's why it says here that a product might require a number of complicated machine setups, or quality control activity might be more intense for some products than for others, right? So we match the production to the complexity, the mechanisms that or the processes that the product has to go through before you have the product itself. Very well. Right now, with the ABC approach, overhead costs are accumulated initially in activity cost pools, right? We'll break that all that down in a in the practical video. We'll be solving an example very soon, right? But so this video is just covering the theoretical aspect. Now, this might include, for example, order placing or material handling. Now, it says that the cost would then be collected and analyzed for each activity cost pool, and a cost driver would be identified for each activity, right? A cost driver would be identified for each activity. So this time around, you don't just get up and you have machine setups and you say that we'll absorb them with machine hours, or we have material handling, we'll absorb them with labor hours that took to, the labor hours that it took to handle the materials. No, we identify cost drivers for each of the items, right? So he said that cost would then be collected and analyzed for each activity cost pool, and a cost driver would be identified for each activity, right? So the cost pools, we analyze them. So you collect the overhead cost into cost pools, right? They are analyzed, and then based upon the analysis, you identify a cost driver for each of the activities, right? Now you have it says that the cost drivers are the factors which cause the cost of an activity to increase, right? So maybe you have your machine setup. It's not machine hours that's causing the cost to increase necessarily. It contributes, but not that much, not in a significant way, right? So the cost driver is that specific item or thing or even activity that is causing the cost of the activity to increase. Very well. So using estimates of the cost attributed to each activity cost pool and a number of cost drivers associated with it, a cost driver rate is calculated, right? So in absorption costing, we use the overhead absorption rate, that's the OAR. But when we are doing activity-based costing, we use the cost driver rate. Now this is similar in principle to the calculation of absorption rates. That's why we use the OAR. For example, if the total cost of the activity of setting up a machine is 5,000 for a period, and the number of machine setups for the period is 250, the cost per setup is 20 Ghana cedis, right? So you have that if the total cost of the activity of setting up a machine, right? So setting up a machine, that becomes the activity, right? So what becomes the cost driver? What causes that activity to increase in cost? That will be what? The number of machine setups. But the more machine setups that you have to set up, the more cost will be incurred per each machine that you are setting up, right? So the cost driver in that scenario becomes the number of machine setups. Very well. So we have what? The total cost divided by the cost driver, and that gives us our cost driver rate. Very well. Now each product that requires the use of this machine is regarded as having incurred $20 of overhead cost each time the machine is set up for the product. This analysis of overhead costs into activities and their absorption using a variety of cost drivers is believed to produce more accurate product cost, right? And that's the whole idea or rationale behind activity-based costing, to provide more detailed analysis of it provides a more detailed cost, right? A more reliable cost, and that factors in your profit making and all that, right? Because if you are not calculating your cost well and you end up under calculating your cost, you'll be losing a lot of profits. Even if you the same way, if you overstate your cost, it's going to affect you in one way or the other, right? Now the ABC technique can also be applied to non-production costs as well as to the determination of the cost of services provided. Now the reasons for developing activity-based costing. Traditional absorption costing was developed in a time when most manufacturers produce only a narrow range of products, so that products underwent similar operations and consumed similar proportions of overheads. In addition, overhead costs were only a very small fraction of total production cost. direct labor and direct material cost accounted for the largest proportion of the cost, right? So the traditional absorption cost method, or that way of ascertaining cost, was created or evolved in a time when much of the operations, during that time, direct labor and direct material cost, accounted for the largest portions. Sorry, the absorption costing is what I'm talking about, right? And when it was developed in a time when most manufacturers produce only a narrow range of products, right? Now, the products that they were producing underwent similar operations and consumed similar proportions of the overhead, right? That's why absorption costing was useful back then. But as time went on, things changed. Well, and so that's what I said about. In addition, overhead costs were only a small fraction of total production cost, right? That's why absorption costing sufficed back in the day, right? So it was the variable cost, like the direct labor and the direct material cost, that accounted for the largest proportion of the cost. Now, with the dramatic fall in the cost of processing information and with the advent of advanced manufacturing technology, overhead costs have become a larger proportion of total production cost, and direct labor has become much less important, right? So activity-based costing was developed because overhead costs have become more pertinent or more prevalent in the cost of a product or in production. So that makes it, that's why we need to accurately ascertain this cost, or get a better detailed or a more accurate estimate of this overhead cost and include them in the cost per product, right? That's the rationale or the reason why activity-based costing was evolved or developed. You see, I said that direct labor may now account for as little as 5% of production cost. It is therefore now difficult to justify the use of direct labor hours as a basis for absorbing overheads to produce realistic costs, right? So now looking at the weakness in the traditional absorption costing system, right? Now, traditional absorption costing assumes that all products consume support resources in proportion to production volumes. So it tends to allocate a too great proportion of overheads to high volume products, which cause relatively little diversity and hence use fewer support services, right? So that the traditional absorption costing assumes that all products consume support resources, or they consume resources in a proportionate manner to the production volumes, right? So you're saying that the resource consumption is directly proportional, or is assumed to be proportionate to the production volumes, right? And due to that, the traditional absorption costing system tends to allocate too great proportion of overhead, like a very great proportion of overheads, to high volume products, which cause relatively little diversity and hence use fewer support services. So it becomes a contradiction due to that assumption that the consumption is proportionate to the production volumes. They tend to use more of, if you follow the process, the steps in the traditional absorption costing, you end up allocating more cost to the products that were produced in high volumes. But in actuality, those products, due to their similarity in the way they are produced, are very similar, and other factors, they end up using fewer support services, right? Support services is where the overhead costs come in, right? so that they allocate too small proportion of overheads to low volume products. Right? So their great portion of overheads goes to high volume products, which shouldn't be so, because they don't really use those supporting resources very much. And sometimes you can have small volumes of products or low volumes of products which actually use more of the support services, right? So it doesn't do the allocation well. So that's the weakness in the traditional absorption costing system. Here is a practical question, right? We'll be solving, we'll take all of this in the practical aspect, with the crew. So just check that out. The link will be in the description. So now I'm moving on to just in time and look at TQM. Yes, so now just in time management, JIT, right? So JIT or JIT is a production and inventory control system in which materials are purchased and units are produced only as needed to meet actual customer demand, right? So this is just saying that with this management system, it's about production and inventory control, right? It's a production and inventory control system in the first place. And what it does is that it makes sure that the materials that you have in your inventory is exactly what you need to produce, right? So say you have customer demand of 1,000 units, then this inventory control system, this production and inventory control system ensure that you have exactly that 1,000 units to sell to the market, right? So you don't have any extra inventory, you don't have any what's the word? You don't have any shortages, right? Surplus, and there are no surplus and there's no shortage. What you have is exactly what you need. Very well. Now, when companies use just-in-time manufacturing and inventory control system, they purchase materials and produce units only as needed to meet actual customer demands. In just-in-time manufacturing system, inventories are reduced to the minimum and in some cases are zero. Right? I take that again. In the JIT manufacturing system, inventories are reduced to the minimum and in some cases zero. JIT approach can be used in both manufacturing and merchandising companies. Right. In the most profound effects, however, on the operations of manufacturing companies, which maintain three classes of inventories, that's raw materials, work in progress, and finished goods. So isn't that the most profound effects, however, on the operations of manufacturing companies, which maintain three classes of inventories, right? So for manufacturing companies, there are three classes of inventories. You have the raw materials, you have the work in progress, and you have finished goods. Right? Traditionally, manufacturing companies have maintained large amounts of all three types of inventories to act as buffers so that operations can proceed smoothly, even if there are unanticipated disruptions. Right? So traditionally, manufacturing companies use this principle that it's better to have something and not need it than to need it and not have it. Right? So they're always prepared, but sometimes that can result in a loss. So just-in-time management is trying to eliminate all those risks involved in keeping too much inventory or being undersupplied. Right. So raw material inventories provide insurance in case suppliers are late with deliveries. Right. If you have raw materials already, when suppliers don't deliver, you can rely on what you have and start producing. Work in process inventories are maintained in case a workstation is unable to operate due to a breakdown or other reason. Right. Now, finished goods inventories are maintained to accommodate unanticipated fluctuations in demand. Unanticipated, so changes in demand that we do not expect. Now, while these inventories provide buffers against unforeseen events, they have a cost. In addition to the money tied up in the inventories, experts argue that the presence of inventories encourages inefficient and sloppy work, which results in too many defects and dramatically increase the amount of time required to complete a product. Right, so say that aside the fact that it costs money to have, you know, all these 3 classes of inventories ready and available, experts argue that when you have inventories, it encourages inefficient and sloppy work because there's no pressure in the organization, there's no pressure in the production team, there's no pressure in operations. So everyone is relaxed, according to experts, because they know that even if we don't get this done in time for the customers, we have some stocks in inventory that we can just, we have some products in inventory that you can just give to them for the time, so you don't have to worry, we can finish the work tomorrow. Now, you see, and due to that sloppy nature, you know, that sloppy attitude or quality, you know, this having this inventory tends to bring into the organization, it results in too many defects and dramatically increases the amount of time required to complete a product, right? Because everyone is just wasting time. Now, under ideal conditions, a company operating at JIT, just-in-time manufacturing system, would purchase only enough materials each day to meet the day's needs. Moreover, the company would have no goods still. The company will have no goods still in process at the end of the day, and all goods completed during the day would have been shipped immediately to customers. Right? I said that all goods completed during the day would have been shipped immediately to customers. Talk about efficiency and effectiveness. Now, as this sequence suggests, just in time, it means that raw materials are received just in time to go into production. Manufacturing parts are completed just in time to be assembled into products, and products are completed just in time to be shipped to customers, just in time. Yeah. So what are the benefits or advantages of the just-in-time manufacturing system? Right, the main benefits of just-in-time manufacturing system are the following. 1, funds that were tied up in inventories can be used elsewhere. That's obvious, right? Now, areas previously used to store inventories can be used for other more productive things, right? Throughput time is reduced, resulting in greater potential output and quicker response to customers. Right, very well. Now, what are the defect rates? Defect rates are reduced, resulting in less waste and greater customer satisfaction. Right? Defect rates are reduced, resulting in less waste and greater customer satisfaction. Because everybody is just serious. Everybody knows that they're special, so everybody's working. So it reduces defects, right? And because the defects are reduced, it results in less waste and greater customer satisfaction. Greater customer satisfaction means that, you know, you are producing products that don't have defects mostly, so many customers are going to be satisfied. That's one aspect. And because there are no defects, you'll not be wasting your product, because nobody wants a defective product, so you just put it in the trash. What are the disadvantages of JIT? Right, everything has an upside and a downside. So implementing thorough JIT procedures can involve a major overhaul of your business systems. It may be difficult and expensive to introduce. Nothing good comes cheap, right? Now, JIT manufacturing also opens businesses to a number of risks, notably those associated with your supply chain. What if your suppliers don't deliver? With no stocks to fall on, a major disruption in supplies to your business from just one supplier could force production to cease at a very short notice, right? With no stocks to fall back on, a minor disruption in your supplies to your business from just one supplier could force production to cease at a very short notice, right? TQM, right? Total quality management. Now, total quality management is a management framework based on the belief that an organization can build long-term success by having all its members, from low-level workers to its highest-ranking executives, focus on improving quality and thus delivering customer satisfaction. TQM requires organizations to focus on continuous improvement. That's the keyword with TQM. Continuous improvement. Everybody in the organization is involved. From the top to the bottom, everybody is involved. Right, so continuous improvement from top to bottom, everybody is involved. And by doing that, that is going to guarantee long-term success. That's a basic idea behind TQM. Everybody in the organization is involved or should be involved in continuous improvement. By doing that, we guarantee our long-term success. TQM focuses on process improvement over the long term, rather than simply emphasizing short-term financial gains, right? What are the basic principles of TQM? Focus on customers. Under TQM, the customers define whether or not your products are high quality. Customers' input is highly valued, as it allows a company to better understand the needs and requirements in their manufacturing process, right? So customer focus. The customers control everything. The customer is always right, they are always wrong. Next principle, commitment by employees. For TQM to be successful, employees must buy into the processes and system. This includes clearly communicating across departments and leaders what goals, expectations, needs, and constraints are in place. A company adopting TQM principles must be willing to train employees and give them sufficient resources to complete tasks successfully and on time. Alright, so employees have to be committed, efficient, and effective. That's basically it. The first one was focus on customers. Next one was what? Commitment by employees. Those are the first two principles that we just talked about. Those are the principles of TQM. Remember TQM. Everybody is involved in continuous improvement. By continuously improving, we will have long-term success. That's what TQM is talking about. Next principle, communication, right? Though data may transfer between departments freely, there is a human element to coordinate processes and make sure the entire production line is operating efficiently. Whether it is normal day-to-day operations or large organizational changes, effective communication plays a large part in TQM to motivate employees, educate members along a process, and avoid process errors, right? So, no kidding, right? Communication is a must. We don't underplay communication. Communication has to be effective, right? Effective communication simply means that when messenger A sends a message ABC to messenger B receives that exact same message. That's what effective communication is. Basically, when the message received is the message that has been sent. What are the benefits of TQM? Why should we practice TQM? Right, so the benefits. Because everybody is focused on continuous improvement, one, there are less product defects, right? One of the principles of TQM is that creation of products and services is done right the first time. This means that products are shipped with fewer defects, which reduce product recalls, feature customer support overhead, and product fixes. Your defects are reduced, and you save money from repairing defects, or the money that you'll be using to repair your defective products will be significantly reduced when you apply TQM. Second is satisfied customers, right? Total quality management. If you are always improving, why won't you always satisfy your customers? High quality products that meet customers' needs results in higher customer satisfaction. High customer satisfaction in turn can lead to increased market share and increased revenue. Next, lower cost. As a result of less product defects, companies save cost in customer support, product replacement, field service, and the creation of product fixes. The cost savings flow to the bottom line, creating higher profits. Right? No kidding. If your profits are low, if you are incurring lower cost, your profits are going to increase. The benefits of TQM, lower cost. Well-defined cultural values. Now, organizations that practice TQM develop and nurture core values around quality, management, and continuous improvement. The TQM mindset pervades across all aspects of an organization, from hiring to internal processes to product development. Well-defined cultural values, right? That's the end of this theoretical aspect. I'll see you in the practical session, myself and the boys. Thank you very much for watching. Please don't forget to like and subscribe.